A question, please.
Mr. Chairman, I would like to introduce Mr. Craig Caulfield.
Good to see you again.
Good afternoon, Mr. McFarlane, and to the board and to all the shareholders. The Reserve Bank's 8 consecutive interest rate increases is going to impact Westpac's borrowers, and Mr. King referred to that in his opening remarks. Combined rising food prices, rising fuel prices, energy costs, and we've got $200 billion of loans from the Reserve Bank. A lot of it was fixed at 2%, and that's coming off now, and those borrowers are facing into a variable rate, perhaps around 6%. Yeah. So we're talking about a tripling of the interest rate fee on billions of dollars of loans. This is a tidal wave of 200% rate increases. Many customers, Westpacs and other banks, they're worried and they're anxious of how they're going to cope with financial hardship. Combine that with the uncertainty of COVID, we're going to see some severe mental health impacts. And this is going to extend, to depression and potentially suicide. These tragic impacts go beyond the industry's moniker of financial hardship. I would say that it morphs into psychological hardship. Some customers can draw on lines of credit or credit cards. They can sell off household effects. Mr. King mentioned that you're not seeing signs of stress yet. But I would say that a lot of the loans are set up, whether we want it or not, with credit cards and lines of credit. And people have had greater rates of savings during COVID. So the savings will be used, the credit cards might be used, we'll sell off the boat in the backyard before we default on a loan. So I think that's ahead of us. Drawing on my own experiences of CBA's behaviour, where my requests for financial hardship were refused, I know how deep the emotional and psychological impacts cut. Confidence, I think, and post the Christmas spending, I think it will subside, and these rising costs will take their toll. My 2 questions are, what systems, policies and processes does Westpac now have in place specifically to address emotional and psychological hardship above and beyond financial hardship? And do you or should you have behavioural scientists and psychologists addressing this?
How interesting.
Thank you.
Yeah, how interesting. I'll ask Peter to deal with that, but I might just step back a little bit. It's been unfortunate in one sense that we've had 0 or negative interest rates, globally for a very, very long time. It's a situation that's hard to come out of. And at the same time, of course, we were lulled into a false set of satisfaction in Australia, where we've had over 30 years without a cyclical recession. And so people have gotten used to those very low interest rates, and it's affected their behaviour. You can see the debt levels that have risen as a consequence. So I think it's fortunate that we've had over 30 years, but it's unfortunate that that was accompanied by these artificially low interest rates that at some point in time have got to normalise, and that's what's happening. So Peter.
So a couple of points. Firstly, one of the points I've been making wherever I can is encouraging customers to call us early. So, and that they may or may not do that, but I think there is a sense that a call to the bank is not the right thing to do. We need to change that view. So that's the first thing we're seeking to do. And then they're all the standard options that we have financially, and I won't go through those. But we do train our people in the teams on how to identify and work with customers. Christine Parker has introduced the Chief Medical Officer role. I don't know the exact term of it, but we actually have someone employed by the bank who helps us as management with our own team, the colleagues that work with us, but is available also to work on customer matters. So that will be the expertise that we've had now for a couple of years, I think. Yeah, we've had it for a couple of years internally, and we are building that capability. But I think you're right, it is going to be a hard year next year. I do encourage customers, if they are worried, to call us early, and we are thinking about not just the financial side of what goes on, but also the human side, and how we can help our people deal better with customers.
And we've got to be careful not to stray into the medical territory at all, because we're just not qualified. But you know, there are things we can do.
Well, thank you for at least having that in consideration. Just in terms of the channels of people calling in, you're right. Some people will call, some people will email, some people will use an app. Just keep as many different channels open as possible.
Yeah.
You know, I can recall receiving letters from 2 different banks, and the letter from it was ANZ at the time was, you know, I'm in default, but we're here to help. And the letter from CBA was, you're in default and our rights under the law are, and we can repossess your property.
Right.
Well, I avoided contacting CBA and I contacted ANZ, and CBA took action in the courts to repossess, and ANZ, despite my loan being in default, I've caught up. I caught up all the arrears, and you know, it's in good standing now. And I go back and reflect upon the letters that I had at the time. So I would like you to look at, you know, things like just the letters going out, how they're worded, and all the different channels. Thank you.
Yeah. Well, as the former CEO of ANZ, I'm glad to hear that story. Thank you.